Okay, back with hot stocks. While it's trickled into the red for the Nifty, the broader markets are still staying put, which is why you still have a positive advance decline ratio at your hands. HEG, that's the one in focus. Manvinder Singh Ajmani, who is the CFO of the company, joins in. Mr. Singh, hi, good morning. First, walk us through the quarterly performance. What led to the 54% decline that you've seen in your PAT this time around? And also your margins have come under pressure. So, when can we see a turnaround really come in?
Yeah. See, this time our results have shown some decline. Although our capacity utilization has remained robust as it has been in the past, the decline in the margins is largely attributable towards the increase in domestic inputs, including power costs, and that is what has resulted in the decline in margins. Secondly, in our business, graphite business, there is a lead and lag effect with respect to the raw material prices getting transferred or passed on to the customers. The new pricing for electrodes will kick in from calendar year 2012. So in the meantime, when there are interim price increases in cost of domestic inputs, they cannot be passed on to the customers immediately, because graphite industry, just due to the large production process cycle, is booked with its order for 3 to 6 months. So you will see a lead and lag effect in this, and we believe that once the new prices for calendar year 2012 come in, the margins issue will be redressed. Our capacity utilization has been good. It continues to be good. Our expansion to 80,000 tons is also on schedule. We expect it to be completed by the end of this month, operational by end of this month, and going forward also even on our expanded capacity, we continue to look at good capacity utilizations. Hello.
So then going forward in terms. All right, Mr. Singh, what's the can you hear me, Mr. Singh?
Yeah, now I can hear you.
Okay, I was just asking you about, what about your debt equity ratio at this point in time? Your leverage has increased by 53%. Do you have any plans of reducing that?
See, as we have gone into an expansion, our total capital expenditure planned for our 80,000 expansion plus some quality expenditure is 275 crores. So this debt increase is scheduled or planned, in a sense that this debt equity ratio was to go up considering our requirement of capital expenditure as well as increased working capital requirements for our expanded capacities. So this debt equity increase was unexpected lines for us.
Mr. Singh, as was the case with a lot of other corporates as well, you too have suffered a forex loss this quarter. Any plans of hedging your currency exposure?
Yes, we have also suffered some forex loss. Our loss is largely relating to restating on the foreign currency borrowing as well as on some of the hedging positions. As you know that this quarter saw an extraordinary movement of dollar rupee exchange rate from a level of 44, 50, 45. It rose very sharply from about mid-August to about early September to 50 rupees, about 10%. So this extraordinary movement has meant that the hedging positions go into a negative zone, and hence we have also suffered some forex loss, and we have created some hedging reserves as well. So as an exporter and as a company which derives more than 80% of its turnover from exports, we do enter into hedges in respect of our export exposure. However, when we do the hedging, they are with reference to the spot rates prevailing, and we do the hedging in a phased manner. Any extraordinary movement of foreign currency, like the one that has been witnessed from mid-August till September, is bound to throw the hedging MTM out of gear, really.
Finally, Mr. Singh, what's the expectation in terms of your next 2 quarters? While this quarter has been hit quite significantly. Do you think that the situation may change? Could you give us a forecast of your overall sales and profits for FY12?
As a practice, all along for last many years, we do not provide a revenue and a profit guidance. But what we can guide to is that yes, we will continue to have good capacity utilization. Our expansion is on track. It's scheduled to be operational by this month end. We should have some recovery of the erosion in margins that we have seen over the last couple of quarters. This which has been attributable towards higher input cost of the domestic inputs, and some of the hedging positions are still in negative. You may say some of the impact going forward in the next couple of quarters, and we expect that the pricing for calendar year 2012 for graphite electrodes will be a significant one. The graphite majors have announced price hikes of about 40%, 40-45% from the current pricing levels. While this wholly may not materialize, yet we see or we expect a substantial price increase, and that should allow us to pass on whatever is the increase in domestic inputs so far, as well as any hike that we may see in the needle coke pricing.
Okay, Mr. Singh, good to have you on the show. That is HEG, and the management is hopeful of bettering the performance in the next future quarter. Let's bring up the stock price as well for you and show you how it's panning out in trade. Still looking weak, down by about almost 0.6%. Deepak Moni as well joins in to talk about his thoughts on the market. Deepak,